Insurance coverage, you may have seen, some of you were, I see some familiar faces from earlier. Insurance coverage is my ballywag, which is why I got the great honor of speaking with this gentleman this afternoon. And I think what we've discussed is we're going to try and do a little bit of an overview of the differences between your typical general liability coverages, your BOPs, and then cyber, and then really drill down into the essence of why cyber, why standalone versus endorsed coverage, and then some of the bigger takeaways that we can have from all of the GDPR compliance enactments, the big breaches of our day. And so with that, I'm gonna start with you, Clark. Can you give us a little bit of an overview of the different coverages that are typically involved for a small business to medium-sized business, and what their importance are and how they work together?
Absolutely. So if you think, your traditional general liability policy, it's going to cover you for that, products, completed operations, your personal advertising injury, and just the overall general liability. Think of, slip and fall type coverage, a very, very generic standard liability policy. So if you're selling a product at a certain point, it covers you for that product, and as well as the completed operation. Personal advertising injury is going to be associated with that libel, slander, something like that. So not only will it provide that indemnification, but also the defense associated with it from a claim standpoint.
And so moving into the cyber coverages, can you tell us the different cyber coverages that are available, and the differences between endorsed coverage and the actual standalone coverage? What I mean by that?
Sure. So from a traditional general liability policy, you can sometimes see a carrier who will offer it based off of a BOP or a package, and they'll sometimes include a cyber extension, network security, identity fraud, something like that, where they'll try and throw it in. And a lot of times, most of that's just fluff. So what you're doing is you're adding this cyber, what appears to be cyber coverage, but it's essentially just a little bit of a throw-in type thing that's mainly just associated with third-party liability. When it's cyber exposures, you have first-party and third-party expenses. We'll get into the first-party expenses, but from a cyber policy. But from a traditional general liability policy, it's very, very limited to say. And you may.
Yeah. I think with a BOP or general liability coverage, it's like putting a Band-Aid over a gunshot wound. It's not going to get it done. A true cyber and privacy liability policy, it's unlike other traditional insurance, because I view it more as an investment in your IT infrastructure, more as an investment in your IT budget, in your people, your team. Today's cyber insurance policies come with all sorts of risk management tools, all sorts of resources. There are services that help companies and organizations draft privacy policies.
Now we're talking about standalone coverage, not endorsed coverage. So can you maybe, David, can you expand a little bit about the differences between what you would expect to have covered under some certain scenarios for endorsed coverage versus what you would be uncovered for in an endorsed policy? Because from my client's perspective, and I think maybe I speak for some at least of the people in the room, they've bit the bullet. They understand that we've all scared the hell out of everybody today. They know that they need it, but price point is an issue, and endorsed coverage is often marketed as, well, it's palatable and you still have the coverage. But do you really? Tell us what we have.
So an endorsed coverage is typically going to give you a very small sublimit. Maybe it's $25,000, maybe it's $50,000, something to that effect. It's going to be typically a reimbursement coverage after the fact that something has already happened. So it's going to be a $25,000 reimbursement for you to go out and find a forensics company, for you to hire a legal services team, for you to hire public relations. They're willing to reimburse you on the back end as the company scrambles around trying to figure out, who do I need to work with, who do I need to contact, and what needs to be done. And that's only a reimbursement only. So there's a very stark difference between a true cyber policy, which is going to cover everything from start to finish, and they're going to hold your hand through the entire process. So,
yeah, and just if it's attached to a general liability policy too, a lot of times because it's a sublimit, it can eat into your overall limit on your general liability policy, whatever that may be, and it also may have to be tied in with a bodily injury or property damage claim as well.
And so let's talk a little bit more about what you just said. So when you have endorsed coverage on a policy that isn't made for cyber coverage, you're talking about it having to be tied to a covered claim under the main policy. Can you explain that a little bit?
Sure. Under the commercial general liability policy, it's going to cover you for that bodily injury or property damage, which it's hard to find a way where you're going to be able to tie that to a cyber incident as well. From a cyber claim, you know, what you may have from anything from a network security breach or some sort of hack or incident, it's hard to associate that from a property damage or bodily injury from a general liability policy.
So when you're associating coverage, endorsed coverage for an act or a loss that is not something that is included in the original underwriting of the policy, you're forcing yourself to try and justify to the insurance company that it's covered by virtue of another loss, which may or may not have happened with respect to the cyber or security event or the data breach. Is that right, Dave?
That's right. And the way companies tried to shoehorn a cyber claim onto a general liability policy in the past is they would try to say it was some type of wrongful publication, some type of personal injury, that they obtained this information, they published it online, and I want it to be covered now under my general liability policy for that publication of data. And that's not what a cyber policy is there to do, and that's definitely not what a general liability policy is there to do. They're not trying to, you shouldn't have to try to cram something in and force coverage when you're losing valuable time with every moment that goes by. Because while they're trying to push the cyber claim through, you still have to worry about, did we fully remediate this thing? What exactly happened? Do we notify the Attorney General or all affected parties? The general liability policy isn't going to respond that way in the way at which a cyber policy standalone would do.
And you wouldn't typically see those types of coverage in endorsed coverage, and even if you did, it would be at a much lower sublimit, less likely to actually respond to what we would expect the loss to be. Is that fair?
That's fair. And again, it's typically a reimbursement only. So the company is left to take care of everything for themselves. They're acquiring all of the cost, all of the invoices. You know, if you have a flood in your basement, you're not going to bring companies in to come out and figure out and find out who has the best price and take your time. Your basement's been flooded. You're going to pay whatever somebody's charging to come in and fix it. You know, with a standalone cyber policy, they already have all the right vendors. They already have the right contacts. It's sending in the A-team right away. And an endorsement is not designed to offer all of those services and resources.
Well, great. Thank you. So go ahead. Okay, so I want to segue into the standalone cyber coverage. I think, does anybody have any questions about the differences between endorsed coverage and standalone coverage? Okay, so segueing into standalone coverage, I want to posit this as a question to you, David. In my experience, and increasingly in both general liability, but mainly in cyber policies, you're seeing the advent of enforceable arbitration clauses. And I know, and as you both know, commercial general liability policies and the case law is very well developed. You know, we know, or we generally know, what we can expect from a coverage perspective. As someone who's coming into the market a bit leery of whether I need this and paying a price point for the standalone coverage, knowing that they will have these arbitration clauses in place and knowing that the case law is scant at best, can you see that as a positive or a negative in the interpretation and application of coverages under standalone policies?
A standalone policy, and the right standalone policy, it's going to be a duty defense, so it's going to be extraordinarily broad. And the insured is going to have that consent to settle. The right policy is going to have the consent to settle, you know, within the language. So in dealing with a data breach or some type of attack, really it's more all about the resources. It's not just, are we going to agree to the settlement and write the check? Those things come after the fact, and you see that with banks, financial institutions, credit unions that have to pay the cost up front to reissue all of these payment cards, because it's very hard for an individual to bring a lawsuit for what could be possible harm down the line for some type of identity theft. That is a little bit tougher to prove. But we've seen some companies like with Neiman Marcus where it was enough, the possibility of identity theft was enough for them to still bring a class action lawsuit. The data breach policy, a cyber policy, is very open and it's flexible. Even on the notification costs, they're not going to argue with you on the notification costs these days, whether it's mandatory or it's the right information that was compromised to be able to send those notification letters out. They now have voluntary wording within it, so it's going to help protect the organization's reputation. Maybe it wasn't all of the necessary things to trigger a formal notification, but it's still enough of a worry that the business wants to be able to properly notify all of their consumers and all of their customers that something happened. So it's very open, and it's in favor of the insured.
So I'd like to talk a little bit about what the potential exposures are that we're going to be dealing with cyber coverages. Clark, can you give us a walkthrough on what you would be looking for your standalone cyber policy to protect against?
Sure. So if you're running a network, if you're taking data from customers, employees, you can be exposed. Even if you don't have your own website, you can still be exposed from a cyber breach. So a cyber policy is going to protect you from a network security breach, from Trojans, malicious code being inflicted on your system that slows it down or stops it or spreads even. It also can keep it from the denial of service attack that Carolyn had spoken about earlier, where it just floods your network, shuts it down. That's a loss of business income. That's a property loss that can be associated that you have coverage with on a cyber policy. Safeguarding private information, that private insured information. Not only is that within the U.S., but you also, it expands to the European Union now at this point from Jackie's earlier discussions. But as far as the exposures go, it's very much within your system as well as outside of your system. If you have customers, clients, vendors, your employees, their family members, all of those things can be exposed if it's within your system.
David, could you walk us through some of the most recent breaches, some of the most significant ones that you've either been involved with or aware of, and how they've been handled from a coverage standpoint?
Yeah, I mean, we talk a lot about these massive ransomware attacks. NotPetya, that was talked about during the lunch keynote. If you look at Mondelez, which is the parent company of Oreo and Cadbury, they got hit by the NotPetya a couple of years ago, a year and a half ago. And it wasn't even typical ransomware for that. That virus, that malware, was just intended to completely destroy and corrupt systems. They filed a $100 million
Who
claim.
would want to destroy the Cadbury bunny? I mean, seriously.
That's a good question. Maybe it's hacktivists. I don't know. But they tendered a $100 million claim under their property policy. And the carrier, for a business interruption loss, and it wasn't a standalone cyber policy, they denied it. They denied a $100 million claim, and they said that it was an act of war. We're not covering it. And that's the pitfall of not having, and maybe they do have a standard cyber insurance policy that they've already blown through.
Hopefully they have it now.
Right, exactly. But when you're talking about the type of risk, when you're talking about some of these numbers that are up here, you look at the type of business categories and sectors, healthcare, financial institutions. Some of the data breaches that you won't even see in these numbers are from companies you've never even heard of. They're data aggregators, data brokers, and they store our information, which we should all be outraged about. They store our information in the cloud environment where anybody who knows where to look can go find it. It's not even password protected. It's public facing. So we would never have even heard of these data breaches because it didn't involve social security numbers. Like Exactus is one. It's a large data marketing company. And I think it was discussed in one of the other tracks here in the risk management. But you're talking about names. You're talking about economic information on households. You're talking about children, genders, sexes, everything about customers, households, and consumers that are used in U.S. Census Bureau, that are used for companies like Equifax, TransUnion, Experian. So it's not the sensitive information that you would think with a social security number, but there's so much harm that can come from the exposure of that type of information, your email address, your password.
I have a question for the group. Who here has a credit card? Welcome to the Equifax data breach. Every single one of you. And so we know, empirically that our information is out there and that this is not a matter of whether it can, it has already happened to most of us. I'm curious, I realize in your example that they tender to a casualty insurer. They did not, at least to our knowledge, either have a standalone coverage or endorse coverage that would provide it. In the case of breaches, be it large or small, when they're dealing with a carrier that has issued a standalone policy, what is the temperature in the industry? What are you two seeing with respect to the payment of claims?
With a lot of the clients that I've been working with, they want to get in and find out what happened immediately. And that's where the real value of a standalone cyber policy comes into play. They pay. The companies that are truly involved in cyber risk, they're non-standard carriers. They have forms that are extraordinarily broad and very friendly to insureds. It depends on the carrier that you're with. Because there are plenty of standard companies and a number of companies, if you don't fully focus on cyber and you don't tailor the policy correctly to the risk to the insured, then sure, they're going to push away. But I'll tell you, the clients that I've worked with where we've properly tailored those policies, they respond so fast. They're going to instantly send in an incident response team to figure out what in the world happened. How long has somebody been in the network for? What information did they take, if any? What information did they view? Who's going to be at risk? So that's where a lot of the value comes in. It's on the first party coverage, and that's before there's a claim against the company.
Yeah, and I would just to kind of just dovetail off of that, the standalone cyber policy, whenever there's going to be a breach for any entity, it could be a Friday afternoon, that's the time. It's all about the timing of it, because your concern isn't so much, unlike a traditional general liability policy, somebody slips and falls, I can file this claim, my adjuster is going to handle it, I can get back to work on Monday. If there's a cyber breach, you could be locked out of your system for 2 weeks while they're doing this investigation. So the cyber standalone policy is going to take that burden off of you. They're going to figure out with that forensic team what exactly happened. How far, does it expand? Who is it all affecting? To be able to get you back in place, because your concern is you're trying to get into work. You're trying to be making the money. You're trying to build your company and protect your employees and your clients.
So in my experience as a coverage lawyer, and I'm just going to apply some general principles outside of cyber, it's always the consent to settle clause. It's always the cooperation clause that the insurance companies come in and bash you over the head with when they don't want to pay for the ultimate settlement of whatever third-party liability is. Would you guys say, or do you think that having a policy that provides this type of first-party coverage to identify the event, mitigate the event, stop the event, correct the event, while at the same time offering third-party coverage, third-party liability coverage, is actually a plus in that you probably can minimize those differences in discussions that you have with insurers?
It's a huge plus. It's a huge plus because you need to have both sides of the house. You have to have everything that comes on the first-party side. Because most of the time, IT teams, groups, they're so stretched for resources. They have a number of projects that are business-oriented, that are in the pipeline that they're focused on. And I think that goes for a lot of us. And I work for a global organization. And that's still the case. It doesn't matter how much money you throw at the IT department. There's always something more that they can be doing on the business side for the business partners. So a standalone cyber policy is going to give you all of those resources on the front end to work with the IT team to figure out, how can we get through this? How can we mitigate this circumstance? And how can we make it right? And again, that's all before a third party is coming after you. That's all before you have to, answer to the FTC that's knocking on your door, or maybe regulators in the EU. They're going to take care of everything up front and then worry about the third party, claims later.
So I have a couple of questions about regulatory fines and penalties and some other exclusions that may come to play. But before doing that, I want to talk a little bit about the importance, assuming you agree, you may not, of having the right people in the room making the decision for your risk management program as a whole, which isn't just, in my mind, insurance coverage. It's all of your insurance coverage, all of your privacy policies, all of your data retention policies, your data breach and response, incident response plans. I mean, is that something that you would agree with? Is there something that you can add to that discussion for us?
Sure, yeah. So an insurance policy is just one piece of it. It doesn't work unless everybody is bought into the program with the company, whether you're a small business or a large business. Yeah, these large businesses may have the resources for an IT department, for a crisis management department, communications department. Those insurance policies, those cyber insurance policies, provide those resources for you, and they're available before a claim ever occurs. So I think, for me, it's very important to have that holistic approach within your company, because that intern who's just working for you over the summer is just as much as a target as that CEO is in your company to get hacked or phished or anything like that, email spoofs.
And building on that, David, so one of the concerns that I have had with standalone coverage is the prior acts exclusion. I think we can all know, we're all familiar with these horror stories where you'll have this embedded code, it's dormant, nobody's used it yet, and then all of a sudden it pops up during the policy period. What has been your experience with insurance carriers invoking the prior acts exclusion to exclude coverage for claims that are obviously made known within the policy period, but perhaps through the identification forensic process have shown that the code was there present before?
Yeah, I mean, that's always the biggest thing. And that's one thing that's specific to professional liability is you have a retro date. You need to have full prior acts for some type of service or profession that you've provided, previously, where the claim could come back and bite you, in the future. you can't apply those same metrics or that same type of framework to a cyber policy. I mean, with all the professionals in this room, you know how many, 200 days, 190 days or so, that some type of threat, remains within a network, within a system before somebody even discovers it. So I would say that carriers were invoking, especially on the standard side, they were invoking that retroactive date a number of years ago, but we stopped offering cyber insurance policies that have a retroactive date inception on it. Because what value is that if they purchase a policy, they care enough to purchase and invest in a cyber insurance policy, and then when they need it most, the carrier is going to come back and say, sorry, this was something you should have known about. They were already in your network 4 months ago, and you just purchased the policy 2 weeks ago. We're not covering it. I mean, that gives such a bad reputation and a bad name to the insurance side. So we don't offer policies that are going to have that retroactive date inception unless the client willfully signs off on it and it's something they're comfortable with. We always go full prior acts to pick up those unknown intrusions that are already there.
We've mentioned this a couple times, manuscripted policies, and it may be something that's obvious, but would you mind telling us in a little more detail why there's that flexibility in the cyber coverage area and how it can benefit and perhaps some of the pitfalls that come along with it?
Sure. Well, I'll give you an example. We just worked on, it was a big manuscript. It was more of a redrafting of the privacy language that are in some of our partners' policies. We wanted to be able to pick up and cover and address if there's some type of surveillance against employees. But as long as the company notified the employees that they were going to be monitoring and involved in surveillance, because that's something that would typically be excluded under a policy. We manuscripted it to open that up. Another thing that we manuscripted to open up, we're going to be these 20-year compliance periods that you're going to see from the FTC with the consent decree. Facebook has gone through that, and I think that they're going to have the hammer dropped on them. There's going to be a multi-billion or at least $1 billion fine on them for the violation of their 2011 consent decree. But some of the manuscripting that we did was to pick up the compliance, the auditing that has to take place for the next 20 years, as long as you stay with the carrier. These are some of the things that we're opening up. Even the war exclusion. If you look at where terrorism and acts of war have typically been excluded, we manuscript it to be able to add in unless it's a digital attack. So sure, we're not going to cover a 9/11 type scenario, but if it's perpetrated electronically, just like we saw with NotPetya being attributed to the Russian government, we manuscript policies to pick those things up, because you can't penalize a company if they got swept in a larger malware strain or some type of ransomware attack. We want to be there to pick up those losses and to guide them through.
You mentioned the terrorism and war exclusion. Clark, maybe you can help me out on this one. Are there other exclusions or sublimits that people should be aware of when they're purchasing their cyber? And that is it true, in fact, that with all things, as with all things, cyber is not necessarily created equal?
Right. There's no one size fits all. You really need to kind of sit down and kind of just going back to the whole source of this was that you have to sit down with everybody and determine what your true exposures are. A cyber policy built for a healthcare company is not going to be the same one built for a manufacturing company. You're going to have different rules and regulations that you may have to abide by. And so it's important to look, and one of which is the prior acts exclusion, getting that full prior acts included, or the notification expenses. Some carriers will do notification expenses in addition to a number of individuals that they'll notify. So there is no dollar amount to it. So there's an advantage.
No, go ahead.
So there's that advantage. But I think you have to tailor it based off of the industry that you're in, based off of the company that you are, what state you may be in, if you have international exposure. Those are all things that take into account how you would manuscript or tailor your policy based off the exposures that you face.
So this question is for each of you. What I'd like you to give us an idea of is, for those of us in the room who are considering, seriously considering purchasing cyber insurance, or at least reviewing what we have and reviewing the program that we have, what are the steps in the process? Who are the parties that should be involved? Do we just go to an agent? Do we go to a lawyer? What do we do? And in what stage can we do it in an effective, cost-effective way, and of course a coverage-effective way?
Well, for me, for Burns & Wilcox, we're an international wholesale insurance broker, so my client would be Clark. My client is the retail insurance broker, retail insurance agent. So the steps that I think a business would take is to first find an agent, find a broker that specializes in cyber risk, that understands privacy law, that has the right insurance company partners. Because this isn't an area where you just want to add on that little bop or you want to add on a little endorsement. You need to make sure you're working with somebody that really knows this coverage, that has the right connections, that has exclusive partnerships, and can bring all of that to the table for the business that they're representing.
Yeah, and for us, whenever you work, say you called me to work with us, I would obviously, try and incorporate somebody like David who's an expert in this field. I see property, I see directors and officers, management liability, other forms of coverage. So cyber is not all that I do, but this is all that David does. So whenever I'm looking at something like that, or I need to try and build a policy, I'll try and incorporate him into the procedure when I can sit down with the client, determine what those exposures are. We build the policy together, and then I have somebody like Jackie who can interpret the verbiage for the client. If we need to, if there's a GDPR, exposure, I'm able to bring Jackie in to look at that type of thing to make sure that the company's in compliance. And all of that is all hands on deck type of approach to it with you and your team as well. And it's up to the client to determine who internally on their team needs to be involved, because everybody should have a role so everybody knows what to do when it does happen.
Can y'all speak to some of the specific questions? Who here has placed coverage, whether it be your homeowners, commercial, cyber? They're asleep. Little higher. Who here has placed insurance coverage? Gone to an agent, placed coverage, received a policy. Okay, great. So most of you. Would you agree with me, gentlemen, that placing coverage for your typical CGL, BOP, homeowners, et cetera, property policies, liability policies, is different? It's a different underwriting process for cyber? Would you agree with that?
Yeah, it is. It's a very different process. I mean, even for my own personal insurance, I don't even focus on that, and that's a foreign language to me looking at my own homeowners.
Well, assuming that to be the case, can you give us a little insight on what they need? What are the processes and procedures that they need to have implemented already? What are the people that need to be involved in answering the questions for underwriting? Because, correct me if I'm wrong, once you file out that application, it also becomes part of your policy, right?
It does. And I think so it does become a part of the policy, so it's a part of the warranty. But I think you would be shocked at how little information is collected to evaluate and underwrite cyber liability. If you're a large, Fortune 500, Fortune 1000 company, it's different. There's risk management, there are assessments, all of that have to be conducted. But if you're an organization that's maybe 100 million or 50 million in revenue and under, they're typically taking a look at what are your overall revenues, what industry segment are you in, have you had any claims over the last 5 years? And with that little bit of information, they will offer a quote. And some carriers will even give a discount if you're willing to fill out a little supplement that talks a little bit about your firewalls and are you PCI compliant, things of that nature.
So I want to drill down a little bit on the discount, because I think that's important, particularly when people are weighing the cost average of, do I want to do this? Do I want to take the risk? Can you speak to some of the questions that are asked about encrypted USBs, personal devices, perhaps even talking about how you can buy back through endorsement coverage for mobile devices, for those of us who work on surfaces, mobile phones, et cetera? Can you give us a little insight there on what to expect?
Yeah, so some of the basic applications, they want to know, what does your overall security posture look like? Do you shred up? Do you shred documents? How long are you obtaining information for? Do you have a bring your own device policy to work? Are you encrypting mobile devices? They start going into some of those questions around the overall security framework. But I'll tell you what, some of our insurance company partners that really focus and write cyber liability as their full-time job, they've been able to collect enough data on clients over time. So just because you're PCI compliant at the time of filling out your application, if something happens a year down the line, they're probably going to say you were out of compliance, you weren't PCI compliant, we're going to fine you for that. So the carrier's intention is not to decline the claim because of that, because you were compliant at the time, but something happened where it brought you out of compliance. They stop asking some of those questions. But again, when you get into larger companies, they do want to know a bit more about what your infrastructure looks like. How often are you backing up your information in the event of a ransomware attack or restoration?
By a show of hands, who here accepts payment cards as part of their business? Okay, can we talk a little bit about the sublimited coverages for PCI, fines and penalties, regulatory penalties, and some of maybe the coverage issues that you've had in securing coverage for the actual fines and penalties levied?
Yeah, years ago, we worked with carriers that would sublimit PCI. So it shouldn't and it does not fall under true regulatory coverage because it's not a regulatory body like the FTC or like GLB. So the PCI compliance is a self-regulating professional body. So what we do now these days, we give full limits for PCI. So if your policy limits are $5 million, if they're $1 million, that's what your PCI limits will be. And if there's some type of fine that's assessed, if it's a $100,000 fine, $200,000 fine, whatever it may be, the carriers will pay out, they'll write the check, and they'll pay it in. So it used to be something that was sublimited, but the best carriers that are doing it now, they give its own full limit to make sure that it's adequate for the risk.
So let's talk a little bit more in detail about what are the costs, what are we talking about average-wise? Not your big multinational corporations, your tech giants, but your everyday mom and pops up to, you know, medium, large businesses. What are the costs we're talking about?
For your premium wise?
Cyber.
Yes, so for
Well, what does a typical data breach
Right.
cost?
Yeah, so as you can see, the average cost of a stolen record is over $200. We talked
That's
about
per record.
per record, over $200. So, you know, and that's records of, like I said, employees, vendors, clients. So if you think, oh, well, I'm not that big, which is a lot of the time, this is what we hear a lot of, we're not that big. This is only applying to Home Depot or Target. Anybody's a target. Small businesses are the targets. So don't think of cost. What is this going to cost me from a premium wise? My question is always think of this as a cost for you internally. What would be the financial impact if you had to shut down for 5 days to investigate a breach because you were shut down because somebody hacked into your system and said, hey, pay me $8,000 in Bitcoin or I'm going to release all of your client information? Do you do it or you don't? Then either way, at this point, it's a breach. Now you're subject to your state regulations. You have to notify the Attorney General. You have to notify all of your clients, your vendors, whoever might be infected. So for a simple average cost of, you know, for a company that's doing less than $1 million in sales, we're talking maybe $1,000 for an annual premium to alleviate the cost that could be upwards of, you know, $50,000 to $100,000 before you really get into the meat of it from a cyber claim. Like David said, all you need is an address, the type of work that you do, your revenues, and you can pretty much generate an indication for you to where you can sit down and say, okay, now that I see this is the price for, or an indication for a cyber policy, let's really sit down and see what are some of the resources that I already have in place that can help provide a credit or alleviate some of the additional premiums further down the road.
So let's talk a little bit more about alleviating premiums, because I think that's always a winner conversation. What can specific industries do? What kind of plans and policies can they implement? What kind of software, hardware, IT services can they use that you have seen that have a real impact on the premium charge for, you know, what we would call quality coverage?
I think some of the things on the front end risk management, I've seen companies that if they track and they monitor their employee credentials. So think of all the places that you, or I think of myself, all the places that I log into and I use, because what was it, 200 different places that we have logins and passwords for?
It's terrifying.
There are some services that will track a company's domain, and they'll look to see where have employees been compromised in other third-party sites. Because a lot of times that's a breadcrumb trail right back to the organization, especially when they're using the same exact password. It's tied to their corporate email address, their identity. That's all fuel for phishing. So when companies implement risk management tools like that, you know, things like that can result in a premium discount. Just basic things. If you're backing up your data and doing it, you know, on a frequent basis, if you're using firewalls, if you're doing phishing training or privacy awareness training, all those things start to bring down the overall cost of the policy because it's a better risk for the carrier and it makes you a better organization to deal with something or to prevent a possible attack from occurring.
And one of the things too, so you can see it's 191 days on average before anybody figures out that there could be a breach. So say you didn't have a policy in place and then the breach occurs. Well, then you have to handle it all yourself. But when you're saying, okay, at this point, now I really need to get the cyber, you go and you fill out this application, you have to disclose that there's now been a breach that's been known. So that cost, that minimum cost it was from before from a premium standpoint, is no longer valid. And you can pay for this up to 5 years. Now, it depends on the magnitude of what the breach was, but for that little cost up front, you can keep it from becoming a larger premium down the road from a breach that you could have avoided.
So I want to segue a little bit into your experience with certain types of claims, certain types of coverage within the policy, within the cyber policy. Are there areas that are more scrutinized than others, and if so, what are they and why? Well,
there are a couple areas. I think the social engineering is one that is scrutinized. And that's exactly what we talked about with JP Morgan. You have an employee that gets an email says, the CEO is asking you to wire transfer this money. That's probably an area that I see so often, more than most others, where you have employees at a small to mid-sized firm, they wire transfer out $30,000, or maybe it's goods, maybe it's some type of shipment. So that's an area that carriers will scrutinize, and you want to look at the language, because that's not your typical crime coverage. Crime is somebody getting into the network somehow, and they're the ones that initiate the transaction on their own. With a social engineering attack, you have an employee that willfully gives that money away. So I've seen those claims denied again and again and again. So it's important to make sure that you have the language that's going to address an employee willfully sending that money off. Another one is the mobile device. If it's not encrypted, and a lot of times we see laptops that are left at airports, or somebody loses their phone, or whatever it may be. If that data is not encrypted, a carrier may decline a claim, and that's when you need it the most.
Have you seen carriers decline? Say, for example, that in an application we make a representation that we're using mobile phones, but we're using a VPN with them, and for some reason the breach happens when that VPN is not on. Have you seen denials on that basis?
I haven't, because again, at the end of the day, they're there. Insurance is that peace of mind. So if you're working with a carrier that's looking for every little opportunity to decline a claim and to not step in when you need it the most, the carriers that we work with, I've never seen a claim decline for that reason. If you typically use a VPN, or you're typically using your firewall, or the data's typically encrypted, and something happens where it's not, they're still going to step in and write that check, and they're going to remediate for you.
Along those lines, I found, and this is just my own personal theory, so feel free to tell me that it's wrong. I found that, at least in the last 10 years or so, insurers have been more reluctant to pay claims under your established law CGL policies. They've been more likely to invoke exclusions, more likely to stretch what the coverages are or what they are not. But with cyber, is it a function of underwriting? Is it a function of the unknown? Are they using these sub $1 million claims as R&D? Not to put you on the spot.
No, they are, because I'll tell you, there's not a lot of underwriting that goes into the majority of these risks where we're providing quotations, we're providing indications. How can a carrier or a broker possibly underwrite to the true risk that an organization is facing? You would have to roll the sleeves up, get into the network, look at how employees are being trained, look at the daily flow of communications, you have to look at approvals. Do you have a disaster recovery plan in place? How often are you backing up your data? There's so much that has to be reviewed and assessed to accurately underwrite. And then you can still do all of those things and then end up with a ransomware attack because one employee clicked on some type of fish. So the underwriting is not as detailed as what you might think for the type of risk, but the carriers are doing well because it's a numbers game. It's probably the fastest growing area of insurance. Cyber is probably a $3-4 billion premium volume within the U.S., and it's going to double over the next couple of years. Worldwide, it's going to be $15-20 billion of cyber premium. So the companies and the carriers are making up in aggregate for the big losses that you hear about, where it's a $100 million pop here, or a huge nation state, or a ransomware attack that happens here and there. They're making up on a lot of the smaller organizations that don't experience a breach.
So I'm always a big fan of crystal ball predictions. We've seen, particularly in the finance and health industry, where we're moving towards biometrics. What are your predictions for the future insofar as insurance coverage and the role that AI and biometrics will play?
Well, AI is promoted a lot in terms of cybersecurity firms and machine learning. They're looking at behavioral analysis. Where are people logging in from? Is it an off time? So that's a buzzword that we hear thrown around all of the time. I think as it relates to cyber liability, privacy is going to be the bigger discussion, because we're seeing a tightening of regulation, not just in the EU, but we're seeing a lot more within the United States. I know for years they've been talking about a national privacy regulation, and we're yet to see that. But if you look at what's being done in California, just like when California enacted the first data breach notification law all those years ago, everybody else adopted. So I think we're going to see that much more on the privacy side. You're going to see a lot more paying out and attention to, were you transparent with your privacy policy? Were you collecting information without, the consumer knowing? Who are you sharing it with? We're going to see a lot more fines and penalties on the privacy side, and I think that's where a lot of these policies are going to have to be built to be able to pay out.
Well, with fines and penalties being one of the larger components of what we're looking to shield ourselves from, would you agree with me that it does present an issue insofar as what jurisdiction you're in, what choice of law will apply to the policy, because depending on the jurisdiction in which you're in, that may or may not be insurable by statute?
It does. I mean, so you look at biometric information. There are a couple of key states, Chicago or Illinois being the one that enacted the very first biometric privacy law. I think that might have been 2008. And now it's starting to catch up. Facebook, with all of their facial recognition, the state of Illinois said, well, you violated our biometric privacy law. So it does depend on where you are, because that same biometric law is not going to apply maybe in Michigan. I made the flight out from Detroit. We don't, even in Detroit, Michigan, we don't have the same type of data breach requirements that the state of Louisiana has. So it does depend on where you are located. With the internet and with data, it's all cross-border. There are no boundaries. But a lot will come into play with where you are based and what your privacy laws look like and what type of laws overall from a regulatory standpoint you have to comply with.
So I'm just going to cue myself there. You definitely need to see an insurance coverage lawyer. Okay, well, we only have 5 minutes to go, gentlemen, so I wanted to go ahead and give each of you an opportunity to please give us your main takeaways from our discussion, and what people should be looking for in coverage, what is important, and maybe some red flags that they can avoid.
Sure. So I would say typically what I face a lot of is the small business, and reasonably so. That a lot of them, believe that they're not at risk of exposure. The small businesses are the ones that have had an increase in frequency and severity over the last 2 years from cyber claims. And it's relative in the sense of, think small business is, in the insurance industry for this type of stuff, it's 500 employees and below in some circumstances. So if you may not have a cyber policy now, or even an IT department now, if you look into it, a lot of these policies, specifically, with Hiscox or Travelers, XL, some of these carriers, what they're able to do is provide pre-law services. They can come in and they can do coaching for you as far as phishing. They can do an incident response plan, work with you to have that. They can come and do training for your employees. All of this is included in your premium. And and you would be surprised how inexpensive it can be if you've not experienced a breach at this point too. And even if you may have an incident in the past. I think it's worth looking into. It's a buyer's market at this point. I said it last year, it really is like the last frontier. It's the Wild West for cyber with criminals and how they're getting out there and what they're able to do. And it's just going to continue, the statistics are just going to continue to grow as far as what these criminals are able to do.
That's comforting. David?
So many organizations don't think that they are going to be a target, but if you look at where employees are using their corporate email and the sites that they're going to, I can't tell you how many times I've seen company email addresses tied to the Ashley Madison data breach. It's unbelievable. People are using their work emails for things like that. I've seen it so many times. So I think the big takeaway is a cyber insurance policy is more than just financial risk transfer. It's an investment in IT. It's going to cover IT overtime costs. If you look at DLA, a large multinational law firm that got swept up in the NotPetya attack, they said that they had 11,000 hours of IT overtime. A cyber policy would cover that. A cyber policy is going to cover you for your business interruption for data that you're storing in the cloud, that you're using a vendor for. If that information gets compromised or gets locked up, a cyber policy will pay the business interruption. It's going to pay the IT overtime costs. It's going to pay to have the forensic firm come in, the cybersecurity firm come in. It's going to pay for legal costs. Who do I have to notify? So it's about more of an investment. It's about more bringing resources into the fold as opposed to just, well, this is a check we have to write now. A regulator's coming after me. It's so much more than that.
Well, thank you both. I want to open it up to, do we have questions? Yes.
I was just curious how this all differs between businesses and consumer-type cyber policies. I assume there is such a thing, and how they underwrite that.
Yeah. With consumers, it's more of a resource. So it's more of, we need to remediate your identity theft. We need to come in and take a look at, did they get a hold of your credit card? Are you moving? We're going to help you with relocation, with making sure that all of your mail and your address and everything gets transferred over from a privacy standpoint, so that's taken care of. The personal side is more resource-based. On the business side, there are certainly a lot of resources, but the big thing is to write that check also when you have that third-party claim, because individuals typically aren't going to have another party that's coming after them. They have to deal with it themselves. You experience medical identity theft. You had your credit card compromised. They help you work through that. On the business side, they do it all for you, and then they also write that third-party check. much.